everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at Verified Investing, coming to you live from the Verified Investing Studios. Okay, we have lots to cover today. We've got earnings galore coming out this morning. UPS, GM, Spotify, Pepsi, GE, you name it. We're going to cover the charts. Where are you going to want to be looking at the levels for support and resistance? I will get all into it. So again, big things coming. We have Tesla after the bell today. That's going to be a big one. Don't forget Meta on Wednesday after the bell, and Microsoft and Alphabet on Thursday. Big week for earnings. Let's get right into it. All right. Number one, we're going to flip over here and we're going to go right to our website here, verifiedinvesting.com. Don't forget, guys, on this you have charts galore. You can see, again, I've covered many things. You have the Solana chart. You have various other key elements of technical analysis, both in the stock section as well as the crypto section. Also, again, as I showed you guys before, economic charts. I have action and technical analysis on the 10-year. The yen is collapsing. That's a big one to watch. Insider selling stats as well as the dollar depreciation stats over here. Don't forget, we have the economic news and the earnings calendar right down here on the website. All right, next up, what we're going to do is we're going to get right into a few charts here. I want to start with the U.S. dollar. The U.S. dollar right now, folks, is again consolidating. We know that it broke out. We're still making this bullish consolidation pattern here. I have my upside target right up above 107. Now, if that does happen, we should see gold and silver continue to pull back. They're pulling back today. Again, I've been kind of bearish since we got that topping tail, looking for a pullback to be buyers of the dip. I'm going to be buying the dip on gold and silver. And again, we just need a little bit more of a pullback on those metals before I start stepping in and inching into those trades. Next up, let's take a look at the 10-year yield, guys. This is a big one because, again, this is something that I actually believe that the 10-year yield has topped out. All right, when everyone else was saying yields were going to continue to go down because of all the rate cuts, I looked at the chart and I said, guys, I think the yields are going to go up. What did they do? From the beginning of the year, they've been going up, higher highs and higher lows. But you have to respect the channel, right? We have the high here, and the high here that we just hit. Notice that every time we hit the high, what do? We pull back to these low zones. So in other words, expecting from me, I'm looking up for a pullback to about 4.4% on the 10-year yield. That will be a key level. Eventually, I want to be clear, upsloping channels, if you want to do some education, upsloping channels like this eventually break to the downside. You don't know when, but eventually I would anticipate that this goes even lower. That makes me very interested in something like the TLT, which again tends to go up when yields are falling. In fact, that's something that I am holding right now with members of Smart Money stocks and ETFs. Okay, let's go on to another chart here. S&P 500 got a little bit of a bounce yesterday. We anticipated this bounce. If you've been watching these game plans, you're literally on the cutting edge of all of this stuff. Notice the technical support, and yesterday, what did we get? We got a little bit of a bounce. Now, in other words, what are we looking for going into these earnings announcements? Now, we have to let the chart tell us, right? So what I'm watching for over the next few days is what type of price action do we get? Now, remember, when you have a steep decline, what you're looking for is, do you get an inkling that it's a bearish pattern, meaning further downside? So again, if we start to go like this for a few days, that would be a bear flag. You would anticipate further downside. We've got one green day today, which is the beginning of a maybe bear flag, but it is not something that you would consider a bear flag yet. You can't look at one candle and be like, oh, that's a bear flag. A flag has to have multiple candles on that time frame to make sure that it falls into the criteria of being a bearish pattern. So if we were to get another sideways day today, maybe a little upside, another little upside day tomorrow, now once you get 3 sideways days, probabilities begin to shift towards the bearish side. But right now, we were at support. We've gotten a little bit of a bounce. Now I'm looking for the chart over the next few days to guide me to which direction the market is most likely going to go. Okay, so again, we'll be watching that very closely. I think on the macro basis, if we look at the bigger time frame, you can't deny this big uptrend has broken, which makes the markets very vulnerable for further downside. That's generally the way I view it. I look at the bigger time frame to kind of direct me to which direction it's going to go. But ultimately, we still want the shorter time frame, the time frame just on the next few days, to kind of reinforce that angle. If it doesn't reinforce it, then I have to say to myself, listen, the market may want to jump back back up, maybe even getting back to these zones. So that's why that smaller time frame is important to take note of. All right, a couple other things here, guys. The NASDAQ 100, same kind of deal. You had the uptrend that was broken. Then you had the sideways trend. Remember, I showed you this from 2021. This is such a powerful chart. Notice again, before I flip back to that area, notice this. Now, a lot of people look at that and they say, oh, that is bullish consolidation. Technically, it does fit the criteria, but you have to take note of the bigger pattern. And this is what I just was talking about a second ago. The bigger pattern was this longer-term uptrend, and even when this was consolidating, it broke that uptrend. And so what that does to me is it changes the probabilities. Like if you just have a move up like this and like that, that's a bull flag. Probabilities probably 70, 80% to the upside. When you have a secondary pattern that is a longer-term pattern that has now broken, it makes me look at this and say, uh-oh, this is distribution. And distribution is where institutions are dumping into retail FOMO buying. So again, this was an alert once we broke this uptrend, even though we were going sideways, which is technically bullish, that it wasn't a move up that was coming, but probabilities were favoring a rollover to the downside. And just to show you guys this going back a little ways, let's go all the way back to 2021 on the chart, right? The highs, the all-time highs here. And let me just zoom out here, and there we can see exactly the same thing. So what we can see very clearly, right? We had this uptrend here, constant grind higher going into the all-time highs of 2021, and you had that same sort of sideways chop, which then broke to the downside. And again, once it broke, we really had a big correction, the NASDAQ 100 dropping 37% before we got the next bull market to come in and rally us up. But again, I always like to show that because you have to look at multiple time frames, at least the best traders and investors do. They don't just focus on the 10-minute chart or the 1-minute chart or the hourly chart or the daily chart. You look at the one that you're focused on. For a swing trader, generally the daily chart, but then you also expand out to the larger time frames. Go to the weekly, go to the monthly. Do those confirm your analysis? If they do, probabilities are greater that you're correct versus if you just see it on one time frame. Okay, a couple other charts I do want to get into. Yesterday we talked about Tesla being a buy below 140. That was based on a trend line to the downside here. And again, if we zoom out on this, guys, take a look at that trend line, right? Pivot low right down here, pivot low right here, and pivot low right here. Now, again, as of now, we've bounced off that level. It's trading around 142 and change this morning. But the question is, in earnings, is it going to hold this level? And that's going to be a big question mark. The one thing I will say is that in earnings, anytime you go into earnings, if you hold into earnings, the probabilities are probably a little bit less because something that a CEO can say in a conference call can make a major difference in what ultimately the stock does in the short term. So the probabilities are not as good. Like if you look at this, if we weren't with earnings today, I would say this is probably about a 75% chance this goes up. Now because of earnings, it probably goes to 65 to 70% favoring of the upside. The other thing to keep in mind, folks, is that you have to remember that because probabilities are not ultimately 100%, right? I mean, 65, 70% still leaves, 30 to 35% that you're wrong. The scary thing about holding into earnings is that if you're wrong, the moves are massive. And so, for instance, holding a stock into earnings, you can ultimately say, all right, well, I have 65, 70% chance that I'll be correct. But the problem is if you're wrong, you can be wrong to the tune of 10, 15, 20% loss just in an after hours period. And that, again, is one of the scarier things. And so each individual investor has to make that risk assessment. I'm here to present the facts to you, the risks, obviously, and you guys ultimately have to determine what is appropriate for your financial situation. Okay, so that's an interesting chart. Now, we did get earnings on UPS here. UPS initially spiked dramatically higher. This is the pre-market data on UPS. You can see earnings. This was yesterday after hours. Here's this morning when earnings were reported. It shot up to about 152. It then has collapsed to about 143. Now, looking at the daily chart, where are the levels? So if we're at 143, what do? We zoom out on the chart and we start looking for technical levels. The first level I see on this chart is right at this low, which is a gap fill at around 139. So 139, there's a little bit of support there. In addition, below that, there's a secondary pivot at 138 as well. So the 138 to 139 level should be some sort of technical support today on the chart of UPS. If it breaks through that level, which is always a possibility, right? We know that. Volatility on earnings is very normal. Then you look to the secondary pivot right below here, which is around, I believe this is around 134. 134 would be this lower level right here. And again, that would be right in that vicinity. So those are your kind of zones. I would consider this one zone because it's so close, it's within $1. And then this would be your second zone down here. So again, 139, 138 zone, and then 134 would be your technical level or secondary support level on UPS. Interestingly enough, on UPS, you can see it's been in a pretty steep downtrend. So in general, what I'm finding is that if you look at this, right, we've kind of been sideways to lower. This was up here over $200, about $230. It's trading at $145 right now. Well, that's as of yesterday's close. Obviously, we're at $143 or so in the pre-market. But again, it's been in a downtrend, so we also want to be aware of that downtrend and where ultimately could be a bottom. The one thing I'm seeing on this is a channel. Do you guys see that? And again, this is something that my eye just can pick up on. It's not perfect necessarily, but what we do want to just take note of also is line to line. And look at that, guys. So again, if you're really patient like me, right, and you're saying, listen, yeah, I may day trade those two levels that I put out today, right, that we just talked about on the shorter time frame, but where might I swing trade this? And remember, the difference is swing trading, you're holding for days, weeks, maybe even a few months. Day trades are intraday. Like, you hit 138, 139. I might be in and I might be out for 50-cent gain per share. I just do a lot of shares and you kind of just grab that money and run as a day trader. On a swing trade basis, this tells me more information, right? Because what it tells me is that every time you hit this line, you get a big bounce, right? Look at that. So in theory, right, if you just extrapolate that out, if we come down to this level, which is around 122 currently, 121, we should get some sort of bigger bounce. That, to me, would be the swing trade opportunity I might be interested in. All right, so again, the differences are when you're looking at the tight time frame, you're zooming in on the chart, you're looking for, on these earnings moves, the potential for day trades. On a swing trade basis, you zoom out, you see the bigger trend, which is down. Where is it bouncing? Off of this level, and that would give me an opportunity for a swing trade. Do I think it's going to hit that level today? No, I don't. But if the markets dump out in the next week or two and it's down on earnings, is it possible it goes there? Yeah, it is. And that would be a level that I would want to focus in on. GM, guys, let's talk some GM here. General Motors, look at this move on General Motors today, guys. Very impressive earnings this morning. Again, blowing estimates out of the water. And again, coming up here, the stock closing yesterday around $42 and change. We're now at $45.76. You can see a line right up here coming into view for resistance. So again, this will be something that I watch very closely. Look at this level right here. All that level is taking this previous pivot top where we had this pullback. That's at $46 right up here. We're only about 25 cents away from it. That will be resistance number one. If it gets through resistance number one, where is our next technical level here? And if we zoom out, we have to go all the way back here. And this is a big one, guys. There it is. Now it's coming into focus. Now this might be something I would consider a swing trade. Notice how day trades, I'm zooming in on the chart. Swing trades, I'm zooming out on the chart. You got to see the big picture for the swing trades, right? And by the way, if I'm a long-term investor, I'm not even on the daily chart. I'm going to the weekly and the monthly because I need to really see the big picture if I'm a long-term investor. Okay, so right here, look at this pivot low. Right here, see that? That's the zone right there. That should be major resistance. It looks like it's right around $48 per share. So again, just something to watch, right around $48 per share. This should be a very important resistance level on GM. All right, couple more that we're going to go through. Then we're going to find out who won the NordVPN 1 year. Quickly, Shopify reporting very good earnings as well. If we flip to the pre-market, look at this move, guys. Shopify ripping to the upside, now over $300 per share, nearing $303. This gets my attention because it's such a big move as a day trader. As a swing trader, you still got to sit back and kind of look for the bigger levels. As a day trader, it does get me interested. Okay, so first and foremost, I have a level here. And again, I had to zoom out a fair amount. Well, that's not true. We can basically look, if we zoom in, we have double top right up here at 312. Okay, so this pivot high right here is at 312. It's only about $9 away at this point. That's not much for Shopify. Spotify. Next, we want to zoom out and say, okay, wait, is there a secondary level here? If we take this previous all-time high, it actually coordinates almost with that level. Basically, 310 to 312 is the zone. This, to me, based on how strong it is, probably not going to swing trade short this today, but as a day trade somewhere in that vicinity, I might be interested. Lastly, let's just touch quickly on JetBlue. JetBlue, disappointing earnings this morning. Take a look at the drop on JetBlue here. Again, crashing down to the downside. This is actually a big move for JetBlue. Closing yesterday, what did it close yesterday? At like $7.50 or so, trading at $6.33. That's a big percentage drop. Take a look at the daily chart. Where is the level? There's a big gap fill coming up just above $6. 606 right here. Look at the gap fill. See that gap right there? That is the zone that I'm focusing in on for trading today's action. On a swing trade basis, same kind of thing. When something like this happens, I gotta let the dust settle. I want to get a better view on this. I probably have to go to the weekly, the monthly chart as well just to get a better view. I'm very careful about ones that are dropping into these levels because, to be honest, what's to say maybe it gets a small bounce here and then goes lower, right? And I should do it more accurately over here. So let's say it comes in here and gets a small bounce, but then it comes down here and you have multiple secondary levels here, then here. I mean, there's just a lot of levels down here that I'd have to reevaluate if I'm looking to be a swing trader. All right, quickly, guys, let's go back here. We're going to do a quick spin on who wins 1 year of NordVPN. Let's do that right now. Then we're going to spin the wheel, and we'll get right into tomorrow's winning prize. All right, today for NordVPN, 1 year of free access. And the winner is I don't know. It's I apologize. Christo3641. I'm probably mutilating that, and I apologize as Tim over here behind the camera is cracking up at me, but what can you do? In any case, you can see your name. If you're the winner, contact Lawton at verifiedinvesting.com. Don't you guys know you have to make simple screen names or simple handles for me to be able to read them off? No, I'm just kidding. Do whatever you want. I'll figure it out, or you guys will see it. Okay. So what we're going to do now, guys, we're going to spin the wheel, and then we're going to take a quick 30-second break to thank iTrust Capital. I do want to just say we do have the new player on the board here. If I just bring this over here, take a look at this. Token Metrics donating 1 year of premium, guys. That's freaking $2,000 on their website. Amazing. Thank you, Token Metrics. You guys are awesome. They've spent time walking me through the platform. It is really freaking cool, the amount of information there that they give you and that their AI gives you and all this stuff. I'm going to talk more about it over the course of the next, few days. But either way, let's spin this wheel and see what happens. All right, smart money stocks and ETFs, 3-month access. That's $450 worth, 3-month access. We will find out tomorrow who the winner is right there. All right, guys, we're going to take 30 seconds because iTrust Capital is a big sponsor here, and they really honestly help us produce everything we do, get my information out to you. So let's take a quick 30 seconds and thank them.
Do you have an existing IRA or retirement account? iTrust allows you to buy and sell crypto, gold, and silver all right within your IRA. And the best part is they make it simple. All you have to do is transfer your preferable amount of USD through iTrust and then invest that into crypto or precious metals on the platform. To get access, use the link below to find out more about investing through iTrust Capital.
All right, guys, we are back right now. Let's focus in on what we have on Bitcoin. Bitcoin in the overnight pushing to about 67,500, just a little away from its key resistance level. It's getting pushed back down today, but nonetheless, I'm continuing to think that yesterday's green day on Bitcoin coincided with a green day in the stock market. So let's watch these next earnings over the next couple days. If the stock market starts to tank, I got to believe that we might see Bitcoin come back down. But ultimately, as a technician, right, no bias, just looking purely at the chart, we know that we have our support level down here, right in here, and our resistance level right here. That's what you're following. Which way does it go? We don't know yet. No one knows yet. All I know is that this is a confirmed resistance. This is a confirmed support. That's all as a trader I know. My job is to watch to see which way it confirms, and then my guess is you get a big move. If you confirm above, I think not only do you hit the all-time highs of 74, but you probably go even higher. If you confirm to the downside, you guys know my level, 52,000 to 49,000. This zone right in here, which basically coordinates with this and the high from the spot ETF. That, again, would be your downside level. So we know our levels. We just have to be patient here. I know no one likes to be patient. We always want the move now. But sometimes charts just need to figure themselves out. They have to find out which way it's going to go. It's waiting on more information itself, just like we're waiting on more information for our informational decisions. All right. Take a look at Solana here. I wanted to cover Solana. Solana went right to the level I told you guys about a while back. This is actually where in smart money crypto we ended up buying. We ended up making a nice chunk of change very, very quickly on this. I was ready for that, reacted, put out the trade signal to members, and they crushed it right there. It's now moved up here. This is your resistance zone right up here. Very obvious. Look at the level here, the level here, the level here, and the breakdown confirmed. This means this is a confirmed resistance. For me, if it gets up into this range, that might be a shortable level on Solana. On the downside, if it breaks this area here, you actually have quite a bit of downside. My guess is you're probably heading to about the $100 even number on Solana right there. All right, so we'll cover that. We always try to cover one different crypto each and every day, but let's flip over to gold now. Gold continuing to decline. No surprise here. I guided you in these game plans. I've given you, again, pretty much every signal. With, again, if you look at, by the way, if you look at the calls that I make in these based on the charts and what they're telling me, and I just translate it to you and tell you what the charts are saying, it really is about 75% success rate. It's pretty darn cool to see that. And here was another great example of this. There's your topping tail. There's your big reversal. I wish we were still down here, to be honest, because I just want to get to a point where I can start buying gold again. It's just not there yet, so I got to be patient. Again, the level here for me, 2,200 right there. That'll be my first accumulation zone, and I'll accumulate all the way down to about 2,100 right in here, right? So you have all this area over here, this consolidation zone right here. But again, this is my area where I'll probably buy a little, buy a little, buy a little, buy a little, all the way down into that range. Don't know if it'll go as low as the low, but nonetheless, just accumulate, my accumulation zone. And as I say, guys, I'm just telling you guys what I will look to do. Everyone has to make their own decisions based on their financial situation. Okay, next up, same thing with silver. Big drop yesterday on silver. I have my zones already picked out, $25 to $26 right in here, right? So again, I believe, yeah, there's a level right here. I don't have it on the chart right now, but right between technically 25 to 26 is the zone. I will be looking to accumulate silver if we get down to that little level there. Next up, we have oil. Now, oil's an interesting one. Oil's an interesting one because, yes, we are on a confirmed support level, but are you starting to make a bear flag? So this changes things a little bit because a confirmed level, the obvious move should be up. And we did get a bounce all the way back up here when Israel sent the bombs back to Iran for that quick little bit before we realized it wasn't that major of an attack. But now we're making a bear flag. So the probabilities are now starting to shift to about a 50-50, right? So 50-50 of a potential breakdown versus a bounce to the upside. Now that's, again, it's a crapshoot. It literally is a crapshoot at this point. But as a technician, I need to know that. We need to know that because, again, if we were playing for a bounce on this, then we have to say, wait a minute, now it's not a slam dunk. It's more of a gamble. Maybe we need to exit that position on the long side. Now, I'm not long oil, in fact, but nonetheless, if you were, you'd have to recognize that based on the change in pattern formation. Next up, natural gas. Natural gas ran right into the key resistance. Take a look at this. Here's your pivot high right to here and right to here. It is pulling back just a little bit, but I still favor, honestly, I still think we go up to this 220 to 225 level before we get any major pullbacks in natural gas. Speaking of big breakouts, there's two final charts I want to show you. One of my favorites right here, this is corn. And this is something, by the way, I have a commodity service, Smart Money Commodities and Miners. And this is a play that we actually have in the service based on a breakout. And I want to show you this, guys. Take a look if we draw a trend line right in here and look at what's probably happening. So I love finding commodities that are beaten down still because, again, the best way to solve a low price in a commodity is a low price, meaning that less people are planting corn because it's so low they can't get a lot of money for it, and therefore scarcity starts to take back over. It drives the price back up. But look at the V bottom and like the handle, right? Classic cup and handle pattern. Are we starting to get a breakout here? It's unconfirmed, but it is on my radar. And in our Smart Money Commodity service, we have that. Another one we have, and I love this. This is just crushing it right now. This is a chart of wheat. Wheat also at the low end of the chart, but look at the wedge pattern and look at the breakout. We broke out, we retraced the scene of the crime. In the commodity service, Smart Money Commodities, we bought right here, already in the money right there. This is just letting the charts speak to us. And that's really all it is, guys. It's shutting off what's in here, shutting off what's in here, and really my gut, wherever, my gut, shutting off your gut, oh, in my gut, I really think no, that's BS. All right, that's just being honest, guys. No one cares. The market doesn't care what's in your gut. It's about what the charts are saying, and that's the key. So on that note, we're going to get going here. I got to get to the trading floor. As always, you guys are awesome. Thank you so much for tuning in. Don't forget the question. The question, guys, what's something key in today's stream, in today's game plan that you did not know? What chart maybe struck you? Give me something from today's show that you were like, dang, I'm glad I saw that today. That would be awesome. I'll look at the responses, and one of you guys will win 3 months of smart money stocks and ETFs. Have a good one. Take care.